Good afternoon, traders, and welcome to this week's Forex Focus, the show where we look ahead at the opportunities that could be setting up in the FX markets. Now, before we jump over to the charts, I just want to say a very quick thank you this week to all of you that are posting in your emails and posting below the videos with your comments and letting us how you're doing and how this analysis is actually helping your trading. So thank you very much for that. It really makes all of this worthwhile, and please continue to send in your comments and continue to use this analysis to help you make your trading decisions. Now, last week, the only real trade that we were looking at was the pound Aussie. Unfortunately, that didn't work out so great. We did get the break below the level, but it went sort of 50 pips into the money, and then traded back against us, and then traded back with us, and it's kind of back and forth, and we ended up actually taking a little bit of a loss on that one. But nothing to worry about there. That's what happens with trading. Trading, you are going to take a loss. You can't be right with everything. As long as you're right more often than not, and you're making more money when you're right than you're losing when you're wrong, then you're on the right path. You're on the path to profitability there. So without further ado, let's jump over to the charts and see what could be setting up for the week ahead. So we have a few opportunities on the cards for the week ahead. The first one is the Australian dollar. Now, the Australian dollar from a price action perspective actually looks a little bit untidy. I mean, we are in a downtrend here, as you can see, by the lower highs and lower lows that are being printed on the daily chart. If we just zoom in there for a moment, you can see that the market has literally fallen off a cliff. So it's traded from 95, so 0.9500, all the way down to 0.7550, so about 2,000 pips there. So very, very, very long way. But at the bottom here, it's starting to look a little bit untidy. However, why are we still interested in this? Well, I don't know if any of you use our blog, if any of you read the research that my brother puts out as and when we're looking to take some of our longer term trades, some of our swing trades off the back of the power play. But if we just jump across there for a moment, if you take a look at our blog here, you can see that we've actually got quite strong fundamental view behind this trade. So a lot of the time we're looking at the technicals, but if we can look at some of the fundamentals and the fundamentals support our trading decision, then that really just boosts our trading idea. And even though the technicals at the moment aren't looking the best, we still feel that with the fundamentals in play, if we can just get a break below the lows, which I'll show you when I go back to the chart in a second, we've got the fundamentals in place which are going to help our trade and push it in the direction that we want it to go. And ultimately, the fundamentals are that we believe the RBA is going to enter its second phase of a rate cut cycle, right, which is going to come off the back of some softer commodity prices. Okay, and we also believe that the Fed, even though this week Janet Yellen came out and she ultimately said that they aren't going to be raising rates, at the next meeting or anything like that. They didn't remove it from the table completely. And our view is it is really still a case of when as opposed to if. So the two central banks there are doing drastically different things. And for that reason, we feel that the Australian dollar's sort of path of least resistance, if you like, is to the downside. So if we go back to the charts here, you can see that we've got on the 4-hour chart, and it's also evident on the daily chart there, you can see those lows, but ultimately we've got the market trading towards these lows here. It threatened to come to our entry points last week, a few times last week. Unfortunately, it didn't get there. It's now trading up back towards the highs. But ultimately, we're looking for the market to trade through the lows here. If it does trade through the lows, we're going to look either to have our stop above the highs here, which is quite a long way away because of what happened off the back of the of Ms. Yellen speaking during the week. So you can see that you've got a big rise in price there between 76 all the way up to 78. However, what's important is to look at the reaction after that. So even though we had a brief spike, so some dollar weakness, sort of directly after that particular announcement, straight after that, the market then started to trade back below the lows, which sort of shows you what the professionals, what the larger order traders, the bigger banks, what's on their mind. Because if they thought that that was a huge game changer, you wouldn't see a complete reversal in a massive spike like that. Now, even though the market has traded up towards these highs, we believe that if it gets back towards these lows and it trades through those lows, we are going to be on, and we're going to see the price trade down towards sort of, I guess the next stopping point is going to be towards the 0.7259. So we've got more than a 1-to-1 risk reward on the table there. If we can get below these lows, we can see on the weekly chart it's still massively bearish. If the market breaks through those lows, and that's going to be a great indication that it wants to go lower. If we can get a stop in anywhere closer between now and then we'll obviously look to do that. But we don't want to get it too close because we don't want to strangle the trade. And obviously we want to give it enough room to breathe and to make us our money. So ultimately that's that on the Aussie dollar front. On the euro pound, as soon as it comes up here, euro pound is pulling back somewhat, and as a result of that we are looking for other short opportunities. Now the best opportunity is probably going to come on a break of this particular trend line here. Now you can either wait for the market to break the trend line and break the lows here at 71.48 before you start to look to get short, or you can look for the market to break the trend line and then pull back towards the trend line, retesting it, and on a failure to get back above the trend line, then look to sell at that point there, which may mean that you get in a little bit at better prices, but obviously the risk there is that if you wait for that pullback and it never comes, then you miss this move altogether. But in any case, we are certainly looking to sell the euro pound through this counter trend line here, and we're going to look at the price action when it gets below there on Monday or Tuesday, as and when it gets down to there. And then we'll look to see how we'll trade it once it's breached that. But so the euro pound's on the table, the Aussie dollar's short as well. And then we've got the pound CAD, which is a little bit similar to the pound Aussie in the sense that it's broken out from a strong resistance level. The only difference here is this looks a much better setup than the pound Aussie. So if you remember, the pound Aussie had also broken out through a resistance level. We said this last week. Then it was coming back to this level, but the price action was a little bit untidy and it was kind of trading towards the lows there. And we were saying that on a shorter term time frame, so not on a long term time frame, but on a short term trade, we were looking to sell it through that level, which we ended up doing. We got about 50 pips on the table before the market turned around, and we eventually came out for a little bit of a loss, which I said earlier. But we still think that the pound Aussie is massively bullish. We were just looking for a short-term trade on the pound Aussie. It didn't materialize. But the pound CAD now is trading back towards a similar level, but it's doing it with much better price action. So as opposed to some really sort of choppy everywhere. In fact, let's go to the pound Aussie for a second, just so we can compare and contrast this so you know what I'm talking about. So just put this in your minds for a moment. You can see the pound CAD is pulling back quite nicely. We've got a nice trend line in there. Now look at the pound Aussie. So the pound Aussie traded up above this level. It sort of then started to pull back. Then it went sideways. Then it pulled back. And there wasn't really an area where we could look to get long. And what we were saying last week is that on a break below here, which was at this level, we would anticipate that the market would drop not all the way down towards these lows. So we weren't looking for a massive 1,000 pip drop off the cliff, but at least give us 100, 200 pips there to be able to take some nice profits. It didn't happen, so we got into the trade. The market then pulled back. It didn't quite come to our stop. All right, then it came down. Then it started to move sideways, and ultimately we came out for a little bit of a loss. We didn't feel that the price action was what it should have been if it breaks below a low, because when the market breaks below a low, you expect it to break below with some momentum. So when the market came back all the way up towards our stop and then traded back a little bit, we decided to protect our account because there are other opportunities on the table. So anyway, look at that price action there. You can see that on the 4-hour chart, it's sort of everywhere. It's very difficult to find a long opportunity from here, even though we're trading at a very big level. So if we go over to the pound CAD, that's got very similar price action in the sense that it has also broken out from a big level. You look at that on the weekly, so it's got a huge level here, but the trading back to that level is much more harmonic. So we've got lower lows, lower highs. We can see what's going on with the price here. If we then get a bounce off of this level at the 1.8659 and it breaks some of these previous highs, then we get the sort of price action that we're looking for, then we'd certainly be looking to take the pound CAD to the upside. Obviously, we need to wait to see what the market does. We're not just going to trade it for the sake of it. The market needs to prove itself to us, but that is certainly one that's on the table. And if you look at the pound CAD in comparison to the pound Aussie, you can see why it looks a much better trade there. Okay, so now moving on to our final one, which is the pound New Zealand. Now this one isn't something that's going to present itself today or tomorrow, but I just thought I'd highlight it here because it is a trade that we will look to take if the market ever gets back up to this level, the 2.1058. Ultimately, it's a very, very strong resistance level, as you can see there. So look on the weekly chart here. It's a very, very strong resistance level. It's been resistance a number of times. Now that it's come back to this level, well, if it comes back to this level and it gives us a false break, so what we'd be looking for is a market to break out above this level, fail to hold above the level, okay, so get back to the level, fail to hold above it, and then close back below the level, indicating that the market's attempted to get higher, it hasn't managed it, it doesn't have the momentum there, then we'd be looking to take that to the downside, okay? So, quick summary there. We're looking for the Aussie dollar to the short side, euro pound to the short side, pound CAD to the upside, and pound New Zealand, if it ever gets back up to this resistance level, we'll be looking to take that short as well. We also talked a little bit about the Traders Corner blog, which my brother writes all of our reports, all of our analysis he puts up there on the blog, which will give you a great fundamental view on where particular trades may be heading. So please make sure that you check that out over at our website, www.traderscorner-online.com, because that really will sort of back up some of the trades that we're talking about here from a technical perspective, and it will give you the fundamental understanding. And my brother writes it in such a way that it is very easy to understand. So it's not written for economists or anything like that. It's written for you guys, everyday traders, to help you get a grip on the fundamentals and understand where the market is going. So I hope you enjoyed this week's Forex Focus. I hope you got some good ideas there. Obviously, you're going to go and take a look at the blog now, use some of your fundamentals towards your trading, because that really is kind of the complete circle there. If you can bring all of that together, then you're going to start to take much higher probability trades, in which case you'll be able to start to put more money on the trades that you're taking if you have the fundamentals and the technicals going together. If you enjoyed the video, please give it a thumbs up. Please continue to post your comments below the video. We really, really do appreciate them. There's some nice interaction there. And thank you very much for watching this week, and good trading.